This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 329, and I'd like to start by saying happy holidays. Hope you have a happy and safe holiday season, surrounded by friends and loved ones, and hopefully you're getting ready to take the new year by storm. My guest today is Steve Carlson, a San Antonio-based real estate investor with over 18 years of experience. He's learned a few things along the way, which he's going to share with you today. There tends to be a lot of discussion online, on social media circles, Facebook groups that talk about specific exit strategies like wholesaling, fix and flipping, rentals, but very few kind of bring it all together, which is how the real world works. Not enough discussion on what the right exit strategy mix might be for you. Now, to be a successful real estate investor, you truly need to have multiple exit strategies, or to use a little bit of a cheesy cliche, tools in your tool belt to maximize your business and your profits and even minimize risk. That's exactly what we're going to talk about today. How to engineer your business through exit strategies to maximize your profits. It's a great topic aimed at helping you most and helping set you up for the new year, give you a chance to think about these things. So please help me welcome Steve Carlson to the show. Steve, welcome to the show.
Hey, Mike. Good to see you again, man.
Yeah. How are you doing?
I'm doing great. It's been a good week for us, good month for us. November was a good month for us, I should say.
Yeah.
So looking forward to a good December as well.
That's great. Well, you're just down the road from us in San Antonio, so I know you and I are in a group together. We're about to go out to Colorado, which I'm looking forward to other than the temperature. So
yeah,
it's going to be a little chilly.
I got my little beard going. Maybe it'll protect me a little bit. At least it looks good.
Yeah. And
That's what my wife said.
I haven't been shaving my legs. I'm kind of in anticipation of this trip.
Good thing. It's going to slow you down on the slope. So,
yeah. Cool, man. Well, hey, I'm excited to talk about exit strategies today and learn a little bit more about your model and how folks that are listening to this can apply different exit strategies. Because, you know, a lot of newer folks, maybe a lot of people listen to the show, or even some veteran folks that we probably know, like they're 100% of wholesaling or 100% rehab. And I've never really understood that. I know you have to have different exit strategies based on, you know, things like if it fits your rental model, or if it's too low level or too high level, you probably don't want to rehab it and take on that risk. So there's a lot of different reasons. So we'll just talk about kind of exit strategy mix and really how to make the most out of your business and how to monetize more deals. So it's going to be a good conversation.
Yes, it is.
Yeah.
Do a lot of fun stuff.
Well, Steve, before we kind of get started, can you tell us more about you and your background? I know you've been investing for, I think you said about 18 years, which is awesome. So tell us about your background and how you got started, and a little bit more about you.
Yeah, I got started. Actually, I bought my first house in 1992. I graduated from college in 90, I think. And within 6 weeks of being on that job with a whole bunch of smart engineers, I realized I am not going to do this the rest of my life. And my boss pulled me aside. He said, "Steve, you're going to have a nervous breakdown if you don't change the way you change your attitude or your outlook." And one of my cube mates gave me a book called Magic of Thinking Big. And that changed my life. And I started reading other big classics like that, and they all had a real estate undertone.
Yeah.
So I guess in 92, I bought my first house. Being an engineer, it took me a year and a half to pull the trigger.
Is that because you were an engineer?
I'm sure.
Overanalyzed it?
Absolutely.
Yeah.
Absolutely. You got to know everything before you start was my attitude, and how crazy that is. That's just not a good attitude to have, I don't think. You got to know some stuff, but you don't have to know everything.
Yeah.
So we did a little bit in the 90s. I got kind of sidetracked with the entrepreneurial bug. I thought I'd do this and do that, and none of those really worked. So in 98, I got back on track. Still had a full-time job. We started buying and flipping about 5 to 10 houses a year, starting in 98. And I realized after a couple of years of doing that with a full-time job that this is just another dang job. And I didn't want another job. I wanted to get out of the job I had, but I couldn't at the time for lots of different reasons. So I started buying some rentals too.
Yeah.
And then when I started buying those rentals, we leveraged them. We put debt on them. And it didn't take me long to realize that those rentals didn't cash flow a lot with debt on them. There was not a lot of cash flow.
Yeah.
So talking around some other folks, we started realizing the cash flow is in owner financed houses. So we kind of just morphed the model over a period of time. So
yeah.
And then I quit my job in 2009 and just did amazing amount of business for the next bunch of years.
Yeah. When you were, not to get too personal, but when you were considering quitting your job, I mean, were you still in that mentality of the engineer mentality, which is probably that you could do it better than anybody else, and you kind of get in your own way a little bit, right? Probably relative to where you are now.
Yeah, that's a good question. I realized at that time when I was ready to quit my job, I could pull the switch on marketing and get the leads in. So I was 100% confident that if I just spent more money on marketing, I could make more money in real estate.
Yeah.
I had a very, very supportive spouse, and the economy downturned. I got a parachute from my job, 6 months of pay, and I knew I could make it happen. So
yeah. Yeah, good. Well, we're talking about exit strategies today. So, the traditional ones are kind of wholesaling, rehabbing, or fix and flipping, keeping houses as rentals. I know you do some seller financing, and a lot of folks do seller financing. Let's talk a little bit about kind of your mix. And I think that, like I said, a lot of people get started and they're like, I'm going to wholesale everything. Mm-hmm. But you and I both know that I think you made a comment before the show started, I don't know many rich wholesalers, mm-hmm. which it's a good way to get started. It's a less risky way to get started, but it's true. It's hard to, if you're not keeping some houses as rentals or finding a way to make 2 or 3 times on some deals that make sense in other ways, then you're missing out probably. But let's talk about kind of your model, your exit strategy mix, and then maybe we'll talk about how that's evolved over time.
Yeah. So we, if the house, Mike, is worth less than $80,000, I'm going to sell it on payments. I'm going to sell it with an owner financing model.
Okay.
Mitch Stephen, he's been on your show.
Yeah, Mitch has been on before. Yep.
I learned a lot. Excuse me.
In your backyard too.
He absolutely is.
Yeah.
I learned a lot from Mitch, and I learned a lot from some of Mitch's partners and some of Mitch's mentors. So,
yeah.
And I tell you, the richest guys I know in real estate all sell houses on payments.
Yeah.
Every one of them, of the richest that I hang out with, I should say, they sell houses on payments. For me, those houses, when you're selling them on payments, excuse me, that income eventually goes away, right? Because those houses pay off. So what are you going to do when they pay off? You got to go sell more houses. You got to keep working. So if the house is worth between $80,000 and $120,000, at least in my market in San Antonio, much of San Antonio, I mean parts and a whole lot of other parts of the country, sure. That's a perfect niche, perfect sweet spot for rentals, because people will pay, your tenants will pay, and they'll stay. We've got some 15-year tenants. I mean, it's amazing how long some tenants will stay. Yeah. So they stay. They can afford the payment, obviously, but the margins are great. You buy a $100,000 house and rent it for $1,100 or $1,200 a month. That's excellent margin.
Right.
And on that note, if the house is less than $80,000, we're owner financing it, because I don't want to deal with that subset of tenants. I've had them, man. I've had $50,000 duplexes, and
I've got them now. So the significance of kind of $80,000 and under year owner financing rather than renting, and then kind of $80,000 to $120,000 you're keeping them as rentals. So let's talk about that kind of break there. It's I guess some of it is the maintenance on houses at that level is probably more significant because it's an older house, right? Yeah. Usually. And then the quality of the tenant. So you're just saying it's a lower, I mean, I don't know how else to say it besides just to say it. It's just probably a lower quality tenant, right? That's going to cause more drama for you.
Well, that's the deal. I mean, you get a nice return on your investment. The tenants stay and they pay. The material costs for rehabbing are pretty low, because we're not pimping it out to with granite countertops and new bathrooms.
Right.
And The biggest thing though is it's long-term wealth. This is your forever cash.
Right.
As I think I heard somebody say one time. I don't remember who it was.
Probably Jack Bosch. It sounds like
there you go.
That's Jack's book. Hey,
Yeah.
So you're saying with rentals or with seller finance?
I'm sorry, repeat the question.
You say you're kind of referring to like that's your forever cash. You're saying more with your rentals or with the seller
Absolutely.
finance?
Yeah, no, the seller finance stuff pays off.
Right. Yeah.
The forever cash is the rentals.
Yeah.
That's your long term. That's the end game. You know, that's the retirement.
Yeah.
So.
Yeah. I agree. And I think you're right. I think when you said you realize that your rentals don't, especially early on, they don't generate a lot of cash. But it's for me, rentals have always been a long-term play. Like it's my ultimate exit strategy.
It is.
Exit from whatever it is that I don't like to do anymore. Right.
Yeah. No doubt. When we sell a house on payments, my average income is about $375 a month, even leveraged. If we sell it on payments.
Yeah.
If we rent a house, my average income is about $150 a month.
Okay.
So my rental portfolio doesn't make a lot, but my owner finance portfolio is we really love that one as far as cash flow goes.
Right.
But when all the rentals are paid off, then we're done.
Okay. And you do some rehabbing too. So let's talk about so above a certain point. Houses just don't they cash flow even worse, right? If you don't want a $500,000 house because you're probably your rent is gonna be less than your payment probably. So talk about that break for you, where that's at. It's time for a quick announcement. We'll be back to the show in less than 30 seconds. PassiveRental.com is your source for turnkey, done-for-you rental properties. If you'd like to be an investor and not a landlord, please visit PassiveRental.com to learn how to purchase cash-flowing, professionally managed rental properties in the hottest rental markets across the country. We can also help connect you with financing for your next property. Invest the easy way today and get started by visiting PassiveRental.com.
For me, it's at 120 in our market and lots of other places, because above 120, you have buyers that can qualify for loans. They generally don't have huge credit issues, so you got to, and you have a huge buyer pool. So they can get loans. Yeah. Banks like to lend on houses worth 100 or 120 or more. So banks like them, and you get good buyers, and the rental margins start squeezing down above 120 because you're not going to rent a $150,000 house for $2,000 a month generally. Right. So the margins for renting are not there. So there's a big demand for buyers, even first-time buyers and move-up buyers. So a huge buyer pool. Yeah. For the 120 houses. Yeah. And how about you? Where do you cap out at? Because historically, this isn't the case for me anymore. But for many, many years, I never really wanted to rehab. I tried to stay under 200. Then I kept up to 400. Yeah. And I've bought some houses a little bit higher than that, but they're not, we're in Texas. So, I mean, there's plenty of houses that are multi-million-dollar houses here, but they don't usually call us, No. So we get a crack at some high-end deals every once in a while, but is there a point that you just won't go past? Because it does get more risky, right? It absolutely does, especially in this environment, I think, Mike. I'm hearing a lot of news about the higher-end houses being slow to sell. As a matter of fact, I had a guy call me 3 times trying to sell his $800,000 house. He was practically begging me to buy his house, but he wouldn't give it to me for $400. So, right. So my max is about $350 ARV. Yeah. That's where I like to be. I did a $550 house a couple of years ago. Lost money on it. I'll never do it again. Yeah, there's a lot of assumptions. It's from newer people that like the higher the value of the house, the more money you could make. And that's just an academic view, because when you start to realize that your materials costs are going to be so much higher, it's going to be put through the ringer with inspections. And because people at that level, they want the house to be perfect unless you're selling it at a discount. And, most people that are buying those move up houses, second, third house, they're trying to leave a problem, right? They don't. They left a house that was imperfect, and they want one that's perfect right now. And you're competing with new builds and stuff like that, where they expect it to be like a new build, and if it's an older house, it's never going to be a new build, right? Yeah, and our margins for the lower price, for the $120,000 to $150,000 houses are pretty nice. Yeah, really good margins on those. We're buying a house for $40,000 and fixing it up and sell it for $120,000. Right. I mean, we've got 40 into it, 45 or 50 sometimes, But those numbers work. On the 350 houses, you're buying them for 200 and putting another 75 into them. So
Right.
the margins get skinnier the more expensive they are.
Yeah, you'd rather do 2 or 3 of the smaller deals for sure. Yeah, a lot more predictable.
Any day of the week.
Yeah, we have a guy. Just this week, we were looking at a house. Somebody called us about it. We never even went out there. It's out in the sticks, so it's like way outside of town. It's a 8,000 square foot house. It's ridiculous, and we're like, it's the biggest house in the whole like 15-mile radius, by far.
So
and it's only on
tack on a $20 a square foot rehab to that, and where are you?
Yeah, exactly. And so they have they have an appraisal at 1.5 million. I'm like, but if you look at the comps, like everything that's selling around there is like 130. Like, well, there's nothing even anywhere close to this because they're much smaller houses. It just sticks out like a sore thumb, and they're trying to tell us how unique it is, and we're like, we actually don't like unique. We want something that's predictable.
Yeah,
we don't want to be the first of anything. We don't want to be a pace setter. We want to be a follower in this business.
Yeah, for sure.
Yeah.
Talking to my staff about that the other day.
So how have your X strategies changed over time, and what's kind of caused those changes? Because I'm sure as you mature as a real estate investor, you kind of hone in on what makes more sense for you. Like some people that do more wholesaling ultimately learn that I can make more money doing this, or you learned that if I sell or finance more houses versus keep them as rentals, then there's some reasons why I should do that, more often. So how's that changed over time, and why?
I grew up in a small town. I grew up my investing career in a very small town, and I had a couple of significant competitors in this small town. And so every transaction that came to me, I had to make it work. I had to figure out a way. How can I make this transaction work? How can I help this seller? And so we were just doing almost anything that came in front. We were just trying to get creative, right?
Yeah.
So, and I didn't want to wholesale anything because I didn't know much about wholesaling in 98. There wasn't a bunch of wholesalers, no corporate wholesalers for sure.
Yeah.
And so I could sell them to my competitor, but I didn't really want to sell them to my friendly competitor. So wholesaling wasn't ever a significant part of my business model. Today we do 3 or 4 wholesale deals a year, but
I think it's harder in a small town to wholesale because there's not, there's not a robust ecosystem. Like in San Antonio, metro area is like 3 million people. And when you get in a bigger metro area, there's, there's every layer of real estate investor. There's a whole ecosystem that kind of feeds each other. But when you're in a small town, if there's investors that generally are probably buying more off the MLS and just using the traditional model because there's not that kind of underground ecosystem, right?
Yeah, but let me get back to your question about how it evolved. I really just wanted to flip. In the beginning, I just tried to flip everything that I could. And 98, 99, 2000, we could sell houses with a new loan for $40,000 or $50,000. So we did. We did it all quite a bit. And then, like I told you, I was flipping everything, and I had no cash flow, so it was a big-time job.
Yeah.
So rather than just cashing out anything, I wanted to keep some rentals. And when I realized that those rentals didn't make a lot of money, I started hanging out with my friendly competitor who was doing really good. After 3 years of him and I doing this business together, we came on the scene at the same time. He was free, and I was far from free because, but what he did, like I said, he owner financed houses.
Okay.
And so it was just that. Knowing what he did and how he got free helped me change what I wanted to do and how I saw the end game. So so we had some market changes, which has forced me from flipping, flipping $50,000 houses. You couldn't do it. And then just my financial position changed as well. I didn't want another job. I wanted more passive income.
Right. Right. Yeah. One of the challenges with keeping rentals early on, too, as you probably sensed, is you have costs you have to cover, right? So if you keep everything as a rental, you're not ringing the register to pay for your advertising, to pay for that admin or whatever you need, right? So it's hard I know a lot of people that get started in this business, they're like, well, I'm going to keep everything as a rental. It's like, okay, well, they don't cash flow much early on. You're not getting huge down payments like you do in a seller finance. So how are you going to cover your machine, right? If you want to keep doing that, right?
Right. And that's why you got to have a mix. And I don't suggest that everybody start off with a mix, but I do suggest, much like Charlie Munger suggests, is that let me get to this quote that I wrote down here, put it on my screen. But Charlie Munger, he's Warren Buffett's right hand.
Right.
He said his key philosophy was, and mine is stay within your circle of competence, which is real estate, right? But constantly strive to widen it. So that's a pretty wise piece of information.
Yeah.
You just wholesale your whole life. Maybe you have a business at the end of it, but it's going to be a big business with a lot of moving parts and pretty complicated that you could possibly sell.
Yeah.
But it's just this transaction thing. If you just have a flipping business, again, same thing. It's just a transaction business. And so you can never really retire unless you make billions or millions and millions and millions.
Yeah. So you need more than $1 billion to retire, is that what you're saying?
Yeah, that's kind of a slip. Freudian slip, I guess.
I'm gonna have to come down and visit you. I don't know what's going on down there.
New market.
Yeah. Well, and markets change too. I know, for example, the last couple of years, we haven't been keeping a whole lot as rentals in Dallas because, I'd have to pay 2 to 3 times for houses I have on the same street that I paid, 2 or 3 times less for, even 3 to 5 years ago. So we're doing more wholetailing and more fix and flipping. And then I think, I know if the market dips back down, I don't know if that's going to happen or not. It feels like it's never going to happen in Texas, right? But if it does dip back down, then we'll kind of lean back into rentals a little bit more again. So, yeah.
When opportunity knocks.
Yep. I say that all the time. We're in the opportunity business, right? You got to find ways to monetize those deals any way you can.
And it's ever changing, man. It's a slow changing machine sometimes, but sometimes it's quick.
Yeah. Well, hey, Steve, real fast, I've got a kind of a question of the week that I want to ask you. And so the question is, what is the biggest mistake that you see new investors make? With the experience that you have, what's the biggest mistake you see new investors make today?
Well, I think a lot of people get started in the business and all they want, and they hear about wholesaling, right? They hear about these massive checks from wholesaling.
Yeah.
So I think getting stuck into the mindset of making $50,000 on a wholesale deal is a reality. At least in my market, it's not.
Right.
In other markets, you talk about San Diego and the East Coast, West Coast. There's possibility, but in in the Rust Belt, so to speak, those big checks are not going to be there. So it's going to be a lot of effort. This business is simple, but it's not easy.
Yeah.
It takes effort to make this thing work. I remember when I was just getting started, I would get stress headaches on Saturday if I wasn't working. And I had this conversation with my wife the other day. It's like, man, I wish more people would be that way, because it really, when I realized that's what's going on, I got a headache on Saturday, and it's because I'm watching football, but I know I need to be out driving for dollars or something like that. It's just, it takes effort. Okay, so maybe that's probably the biggest lesson. It's simple. Doesn't take a complicated individual or super smart guy to get it done, but it does take effort.
Yeah. And did that evolve over time, or are you saying that it takes that fire in your belly, or that fire under your ass, I guess?
Yeah.
To keep you going, right?
Yeah, no, it didn't evolve for me. I mean, it was there after 6 months of being an engineer. I realized, I ain't doing this, man. I'm surrounded by a bunch of super smart guys. I'm not as smart as they are. At least I didn't feel like I was. Now I know I'm way wealthier than 90% of those guys are. And I'm free. I can go in the office when I want and work 50 hours a week or work 20 hours a week. So
right.
It just depends on how much I want to make.
Yep. Well, Steve, let's talk a little about, in terms of exit strategies, let's talk a little bit about, for folks listening here that aren't in San Antonio, they're on the East Coast or the West Coast or somewhere that's a more expensive market where it doesn't make sense to keep rentals. Maybe it probably doesn't make sense to owner finance as much as it would be in the Midwest or Southeast or Texas. Let's talk about kind of the role that geography and maybe even like access to capital, because obviously if you're owner financing, you're probably borrowing that money from somebody else, right?
Yeah.
And so just access to capital and geography and some other things that might play a role in exit strategies help people kind of think through what that might mean for them if they're in different parts of the country.
Yeah, again, East Coast, West Coast, owner financing houses doesn't make as much sense. You can still do it and maybe get close to some margins, but it's going to be pretty rare.
Yeah.
So, if you're willing to travel a little bit or do stuff in Indiana, for example, not San Antonio, then you could be a remote investor.
Right.
So in those markets, what I would just focus more on flipping, and maybe even some quick cash and some wholesale deals, because I know there's wholesalers making 10, 20, or probably averaging 20 grand or 30 grand a deal out in the East and West Coasts.
Yeah.
But they're going to make a lot more doing flips, but then you have to have the access to capital. And without the access to capital, it does have to be more quick transaction type of business.
Right.
But let me tell you, capital right now, Mike, and you know this, there is so much capital out there if you will just get out there and flap your lips. Yeah. There is a ton of money at the Quest IRA mixers and the equity trust mixers, and I'm sure there's a whole lot more that I don't know about. But all these IRA administrators, they are out there drumming up more business at RIAs and at their own events, and when they're attracting people with money.
Right.
And so
the missing link is the investor that wants to borrow that, right?
Yes, oftentimes it is. I mean, right now I have more money on the sidelines from private investors than I can put to work right now. It's a crazy thing.
Yeah.
I have them coming to me and asking me to put when's your next deal coming? Or, hey, I had a guy call me the other day that I haven't talked to, used to work with him. He called me, he said he's got a huge tax bill every month because he's making so much money in the oil business right now.
Wow.
And so he needs to put money to work.
Yeah.
And so I really think there's plenty of access to capital if you will give it out there and do a concerted effort to get it. It's not just going to come find you. You got to put in effort to go find it.
Right.
But it's not difficult. It's simple. It just takes effort.
Yeah. Yeah, and I know we don't have time to talk about today or exactly what your model is, but we had a couple of different episodes with Mitch. For those of you that are leaving, Mitch Steven, who Steve knows well, on the show before, where he talks. He got in fact, we talk. Mitch is the only person that I had on the show, and halfway through the show, I realized we have more than half of the show left, and it was so good. I was like, I literally just hit pause and I said, "Hey, Mitch, we're gonna turn this into a 2-part show, all right?" So we just kept going.
Yeah,
but,
were you talking real estate or were you talking hunting?
No, that was just real estate. Yeah, if we had added in some of his other hobbies, we would have probably been a 4-part show. So, but anyway, for those of you that are listening that want to learn more about seller finance, Mitch trains a lot of people and has a coaching program and has done, I think, around 1,500 properties or something like that now. Not that they were all seller finance, but he's done a lot. But he shares a lot of tips on seller finance and raising private money, and he has a couple books out too, which are good books. So
they're fantastic.
Yeah. So yeah. Well, where do you think the market's going from here?
What I'm hearing, I don't study the markets so much, but what I'm hearing, I study other people that study the markets, is that the high end stuff right now, the expensive stuff, and I've conferred this locally, is slowing down. So you got your high end house is slowing down. I don't know how that's gonna trickle down to the average price or median price house. I really don't know. I don't have that feeling in the short term. Yeah. But we know the high end stuff has dropped, at least days on markets and probably prices. So I'm a bit nervous about that. I do believe that we're going to be. I personally am prepping for a 2020 downturn or a 2021 downturn. That's when from everything that I'm hearing is a possibility of it happening then, because real estate goes in cycles, of course.
Yeah.
And we're in Texas, we're relatively insulated from the big drops and the big increases.
Yeah.
But the coast, I think, are going to see a big downturn around 2020 or 2022.
Yeah.
That's just what I'm hearing. So, and it's gonna trickle down to the low end stuff at that time, I think.
Yeah, the interesting thing about, so this isn't just Texas, but the low end stuff that you're talking about. I mean, everybody knows. I don't care what the government says. There's inflation going on, right? I mean, in basic materials and things like that, no doubt about it. You've seen it in your business. I mean, I talked to my contractors. They're like, we used to pay this for a 2x4, and now we pay this, and it's like it's incredible, really. Yeah. Now technology and your iPad and stuff like that stuff keeps coming down, but that's not the business we're in, right?
No.
But the thing about these low end houses like this, and this is one of the things I love about them, for rentals or even owner finance. I don't do any owner financing, but there are days when I wake up and I want to owner finance my whole rental portfolio. I'm like, we're gonna get out of there. We're gonna. But is that we're in these houses for well below build price, right? So
yeah, look at these margins.
Yeah, you couldn't build those houses. Are the rents are not going down, the prices are not going down, because they're well below the build price. Like, unless there's massive deflation, which I don't think there's going to be, we're pretty safe.
Two things on that point. The probably the most successful long-term realtor I've ever worked with. I asked him one time, I said, Joe, why do you always work in these $80,000 to $100,000 houses, even cheaper? He says, because the market never declines for those. For the cheap houses, the market is always, excuse me, that's my money phone ringing, dang it.
Uh-oh.
The market is always good for the low end stuff. So, and think about it, we're buying these houses for $40,000 and selling them for $60,000 to $80,000.
Yeah.
So there's not a lot of downturn to go. If it goes down 10% or 15%, it's, so what?
Yeah. And if you're owner financing or if you're renting, it's not even going to impact you. I mean, your financing's probably locked in. I know I was worried a few years ago because a lot of our rental financings, for most people, I guess, is very variable rates. So the rates adjust in 5 years. Well, we've had a number of properties adjusting over the past couple of years. The rates are adjusting down.
Mine too.
Yeah.
I've got some soft balloons that happen every 5 years, and they keep going down.
Yeah. Awesome.
So I don't think we're going far with rates. I don't think rates are going to change for quite some time. But
yeah. Well, Steve, thanks for sharing all your insights with us today. Where do you, if folks wanted to learn more about you or they want to get a hold of you, I know you have. This is not going to look good on camera if anybody's watching, but Steve has this report here on exit strategies and how to think through that stuff. And I think you said that folks wanted to get access to it. You tell them how to do that, and then just tell us where they would go to learn more about you or your business.
Yeah, I'm not a marketer. I don't have a product. I'm not going to spam people with a bunch of stuff. But I put together this report because I may start a coaching program here shortly, Mike. It could be a couple of months, 3 months.
Yeah.
So I kind of put that together to explain what I do. But they can go to my website, sarealestatedeals.com.
SA for San Antonio. Yep. Okay.
Yep. And go to slide down to the bottom of that page and put your information in. You'll get a copy of that free report. And I think it's really, really a good report.
It's good.
It's basic, but it outlines what makes sense.
Yeah. I think it's important for everybody to realize. And out of nowhere in my building here, there's a saw behind me. Like, I don't know what's going on here. These guys are doing some work on the second floor, but you really need to have a mix of exit strategies of what you do with houses. You need to have, I hate to use kind of a cheesy cliche, but you have to have multiple tools in your tool belt in this business, right?
I don't think it's cheesy at all.
Yeah.
I think that ought to be the heart, on your wall. have multiple exit strategies.
There you
go. For doing deals. If you just want to get locked into one thing, that's fine. A lot of, like Mitch, I know he does more than owner financing, but he does mainly owner financing. And I know a lot of other guys that are niched out and doing well.
Yeah.
I'm telling you, the opportunity is for being creative and figuring out how to make this deal, this $30,000 deal, or this $190,000 deal work. I think that's where the opportunity is.
Yeah, absolutely. Mm-hmm. Awesome, Steve. Well, hey, thanks for spending time with us today. Definitely appreciate it.
Enjoyed visiting with you.
Yeah, and everybody, thanks for listening in. If you're listening to this show as it was published, we'll basically say, I hope you have a Merry Christmas here, because we got Christmas in just a couple days. So,
Absolutely.
no matter when you're listening to it, we appreciate you. Thanks for joining us today with Steve Carlson, episode number 329. Everybody have a great day. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed master class published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of master classes and other training videos. Elite members also get membership in our incredible online mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.